Hi, and welcome to ECCB Connects. Loans and credit facilities are tools that individuals and business owners use to achieve their goals. What is the impact on you and the ECCB banking system when these loans are not repaid? We discuss these issues with Managing Director of the Grenada Co-operative Bank, Richard Duncan, on this episode of ECCB Connects. Stay connected. We'll share more with you after this message.
The Eastern Caribbean Central Bank is rolling out Dcash, the next step in the evolution of the EC dollar. Use Dcash to send and receive money to and from friends and family. Make payments directly from your smart device. Make payments from wherever you are. Download the app from the Google Play or Apple Store and sign up, or visit dcashec.com for more information. The future of the EC dollar is digital. Let's make history together.
Mr. Duncan, welcome to ECCB Connects.
Thank you very much, Karina. Thank you for having me on the program.
Now, loans are a part of many persons' lives. They seek out loans to finance different endeavors, businesses, mortgages, vehicle loans. People take loans for different reasons. And during the COVID-19 pandemic, of course, we know that people have experienced challenges in terms of their incomes. Some have lost jobs, their businesses have been affected. And as a result, the ability to pay back these loans has been affected. Let's talk today about loans that are not serviced in the way they should be. At what point does a loan become non-performing?
Indeed, you are quite right to say that credit is a fact of life, and therefore understanding very early when you enter a debtor-creditor relationship with your financial institution that you make certain obligations to service that debt as arranged. And in an instance where you have failed to service that debt as arranged for a 90-day period, the loan is deemed to be non-performing. And that's an important definition, because when it says non-performing, some people say non-productive, it means that the bank cannot continue to accrue interest into income. Its profit is affected because at the same time, while you, the borrower, you are not paying the loan, the bank has to pay depositors interest and has to keep the bank running. And therefore, non-performing loans, if allowed to get out of control, can have a serious impact on the bank itself. And of course, it has implications for you, the borrower.
Let's talk about, in terms of the ECCU banking system, how non-performing loans affect the whole structure and set of the banking system.
So this is a very important question. The ECCB, in its prudential guidelines, has set a benchmark of 5%, which says that in any bank, the percentage of non-performing loans to total loans should not exceed 5%. So that's a prudential guideline. So there are implications for individual banks if it is above 5%. There are implications for the banking system if in aggregate we are above 5%. And in the ECCU, we have seen over a long period of time where in aggregate, that ratio is twice that amount, ranging as high as 11, 11.5. And in individual banks, it could even be higher. Of course, in some banks, it is lower. So as a banking system, when we look at how we stack up to other jurisdictions, we want to make sure that our risk management, as we call it, is on point. So again, if we're above 5, and other jurisdictions, are lower than 5, it means that globally, your banking system is deemed to be displaying higher risk, higher vulnerability than the other jurisdictions that are lower. And of course, there are macroeconomic implications as to how we are perceived globally when you look at these statistics or metrics, as we call them.
What situation would the bank find itself in terms of servicing other customers as a result of a high level of NPLs?
So you may have a vehicle loan, you may have a residential mortgage, you may have a credit card. If any one of these become non-performing, the entire relationship is at risk. So you have to service all your debts as arranged. So for example, if your mortgage becomes delinquent, the bank can, in all prudence, call in the credit facilities, assuming that one of these facilities becoming delinquent is a sign that the others potentially are at risk, and therefore the bank has to take what we might call early action to avert a bad situation becoming worse. So that is a major issue for borrowers. As a bank itself, obviously you have loaner depositors funds, you have to pay interest, you have to service the depositors as they come to the bank to do their business with you and so on. Those are costs, right? Chasing down delinquent loans, those are costs, but you're not earning anything on a non-performing loan. So the bigger that problem becomes, the greater stress the bank is under, and the bank can respond in a way that could be detrimental. So for example, if the ratio is supposed to be 5% and you're 7 or 8, one of the ways of bringing the ratio down, for example, is to give more loans. The ratio will come down, but based on the credit risk analysis and the strategy that we use to extend further facilities, they actually put in the bank further at risk. So sometimes you have to read the macroeconomic environment and determine what is your best strategy for tackling this problem. And obviously, when it comes to loan loss provisioning, or because of the NPL situation, that too is a cost to the bank. It affects its profitability. It affects the shareholders of the bank. So NPL is a real vexing problem and potentially can place banks in harm's way, so to speak.
Let's talk about the pandemic. We know, as I've mentioned earlier, it's been disruptive all around, especially to persons earning income. So a person can find themselves in a situation where they're earning less. What can they do to help keep their loan from becoming non-performing?
Keep in touch with your banker. There is absolutely no shame in calling a banker and say, I have been terminated. This is my severance package. Can I speak with you as to how it is? I can use these monies to protect my credit rating, to protect the assets that I'm in the process of owning when I finish paying the loan. And that conversation can take place over the phone. You can visit a bank based on the circumstances, and you can work out an arrangement with the bank. Obviously, based on your age and stage in life, you'll be able to have a moratorium, for example, which would tide you over so that when the pandemic subsides and is eventually brought under control, if you return to gainful employment, you can then rearrange your affairs to sustain the sustainable levels, so to speak. So again, in the pandemic, ECCB has been extremely gracious to allow banks to engage in this moratorium arrangement with folks who have been negatively impacted, such that the banks can give accommodation to customers without being quote unquote penalized by the rules of not being able to restructure a loan that is a commercial loan more than twice in its life, or being penalized for granting or reorganizing a facility that is a retail facility more than twice in 5 years. So those rules have been relaxed, and that allow the banks to be more accommodative and understanding with customer situation. Having said that, even outside of the pandemic, in regular times, banks can and have been granting arrangements to customers based on the specific circumstances. So again, each body's instance is different. Keep in touch with your banker, and bankers are trained to be gracious, to be empathetic in the process of ensuring that depositors' funds are eventually returned. The sale of property, for example, is the sale of the asset that secures the loan is the final arrangement, the final recourse, as it were. But definitely is not the first option. The first option is always to how can we work this out, give all the information that you have at your disposal to your banker, and I'm certain that in those instances, an accommodation can be arranged. No shame in calling up the banker and say, this is what I face. And it's easier said than done, because there's the psychological trauma, there's the feeling of having, let down your family, your kids, as a breadwinner and stuff like that. So all these emotions, come into play. But bottom line is that you have contractual obligations, you have certain amount of leverage and negotiating skills under certain circumstances, and you should make maximum use of those.
So persons are encouraged, like you said, to first of all communicate, let your banker know the difficulty that you're finding yourself in, and they will work with you to try to restructure or work out a plan on how you can service the debt in a way that is easy as possible for you. Mr. Duncan, finally, trying to pick up the pieces from what is a bad situation. COVID has been detrimental in many ways, but then you've seen where some people have turned those challenges into opportunities. So just want you to give some advice to those persons who are struggling, who have a shift in income, on how they can kind of make COVID into a beneficial situation for them.
This pandemic has to be defeated. The question is, what are the tools in our arsenal to defeat this pandemic? It is multifaceted and multidimensional, but the most potent and sure one that we have known as leaders, bankers, scientists, whatever, is the vaccination. So I think we all have to put our foot forward and ramp up the level of vaccination in these islands. Those of us who are into small businesses cannot be comforted with the low vaccination rates, because what is going to happen is that once tourism resumes in a full-fledged way, and there will be spikes as a consequence of that, that is assured, and a lockdown ensues, your small business is placed in harm's way. So as a small business person, you have to be a chief advocate for vaccination, of yourself, of your family, of your customers. You got to keep that conversation going away after that. Now, that said, what I'm seeing is where people have become very creative, and yes, it is that they have pooled their resources together. I have in my village, instance where a small food catering business has started up, and so on a weekend or Saturday, for example, Friday night I order by WhatsApp, right? I go onto the banking platform and I pay. Saturday I just relax and I collect my meal, I'm saying these things have mushroomed in Grenada, and I showed you the OECS, where the needs of people who have resources can be met in creative ways, and the use of technology is extremely important in helping us to do that. So to answer your question, Karina, I'm saying let us defeat the pandemic by ramping up vaccination rates. Let us be creative. Let us use and leverage the technologies that we have to allow us to do smarter, more efficient, more effective business operations in the ECCB.
Mr. Duncan, thank you for speaking with us on ECCB Connects about non-performing loans and for sharing your perspective on how we can address this issue.
Thank you very much, Karina. The pleasure has been mine, and I hope that your listeners are in some way, shape, or form edified as a result of this conversation. Thank you.
And now for this week's financial tip.
Pay yourself first. You've heard that one before. That's because that is the best way to save money. Try to put away at least 10% of each paycheck. If you can't manage 10%, try 5%. Anything is better than nothing, and you'll be surprised at how easy it is.
That's it for this week's episode of ECCB Connects. Thanks for watching. And be sure to join us next week for another program when we share with you who we are, what we do, and how we serve.